This is Josh Hale presenting on the statement of cash flows for the Home Depot. The Home Depot's main source of cash is from operating activities. According to the annual report, the primary source of cash is from customers. The two most significant sources of cash came from depreciation and amortization in the amount of $2,862,000 and changes in accounts payable in the amount of $2,401,000. Investing activities in 2021 resulted in a net loss as a source of cash due to a $7.8 billion expenditure for the acquisition of HD Supply. The result was a net loss of $2,969,000. The only positive cash flow came from other investing activities, which yielded $18 million. Financing activities resulted in a net loss also, while the company brought in $1,035,000 from repayments of short-term debt and $2,979,000 in long-term debt. Other expenditures created a net loss. The cash generated from operations is offset by expenditures for products and services, associate compensation, operations, occupancy costs, and income taxes. The most significant use of cash came from a change in merchandise inventories. The annual report indicates the higher merchandise inventories are a result of efforts to meet the demand environment. The net loss indicates shrinkage in the amount of $5,303,000. Changes in net receivables resulted in a negative cash flow of $435 million. Receivables include cash receivables, rebate receivables, and other receivables, and customer receivables. The highest use of cash in investing activities was from capital expenditures in the amount of $2,566,000 and payments for businesses acquired in the amount of $421 million. According to the annual report, cash used in investing activities decreased because of the acquisition of HD Supply in 2020. The highest use of cash in financial activities came from repurchases of common stock, which aligns with the company value to return value to shareholders. The Home Depot used $14,809,000 in common stock repurchases and $6,985,000 in cash dividends towards shareholders. Net income is operating income with the addition or subtraction of taxes and non-operating sources of income and expenses. It shows the profit of the company makes at the end of the period. Cash provided or used in operating activities simply shows how a company used the cash within the period for daily operating activities. The Home Depot's net income in 2021 was $16,433,000, while net cash from operating activities was $16,571,000. A major difference between the two figures is that net income subtracts certain non-operating expenses because, as Young puts it, they do not involve an outlay of cash. For example, we add back in $2,862,000 in depreciation and amortization and stock-based compensation expense of $399 million and deferred income taxes of $276 million. We do not report net income without adjustments because there are some cash sources and uses not accounted for within net income. The Home Depot has seen year-over-year increases of net sales from $110 million to $25 in 2019 to $151 million, $157 in 2021. Net income has followed from $11 million to $42 in 2019 to $16 million, $433 in 2021. 2019 net cash was $13 million, $687. 2020 saw a jump to $18 million, $839, and in 2021 it dropped to $16 million, $571. The annual report justified the drop by the increase in merchandise inventories along with the higher transportation costs and delayed payment from vendors. This appears to be a one-off, and continued growth is expected based on historical figures and market conditions. The acquisition of HD Supply for $7.8 billion in 2020 also resulted in a decrease in cash used in investing activities in 2021. This investment will likely result in increased profit, supporting Home Depot's financial strength. According to the MD&A, annual sales increased 19 billion as a result of a higher ticket average and sales from the HD Supply acquisition. While the company saw a decrease in net cash, other indicators of financial health, like net sales, show a healthy future. The Home Depot recently purchased HD Supply, as mentioned. This resulted in a decrease in working capital and less money to apply towards investing activities, combined with the increased pressures of demand in retail stores, increase in inventory expenses, and significant stock repurchases of 14,809,000. Working capital has been reduced. Net cash flow in 2020 was 7,895,000, and it decreased to 2,343,000 in 2021. Demand has created tough market conditions, such as increased transportation costs. COVID-19 expenses has chipped away at profits as well. Additionally, the recent acquisition has decreased the company's leverage, has increased the company's leverage costs and will result in high long-term debt payments. The acquisition of HD Supply should pad the company's bottom line. However, the added risk to ensure the acquisition success puts Home Depot in a vulnerable, though calculated, position considering the debt. I do not think these vulnerabilities will affect Home Depot in the long term in a negative way. The company has already seen profits from the recent acquisition. Demand will likely wane as the supply catches up, and the increased sales will support the future debt payments.